So what is owner financing? Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers, and in this video we're going to talk about a concept that is being talked about in a lot of different real estate investing spaces, and it's a topic that we honestly here at the Kwok Brothers have posted a lot about, and it's this idea of owner financing, right? Seller financing, agreement for deed, contract for deed, whatever you want to call it. Let's go ahead and talk about it. But before we do, guys, don't forget to give this video a thumbs up. Please give us a thumbs up, subscribe to this channel, and also click on that notification bell. As always, we always try and put valuable real estate investing content out for you guys to enjoy. And it's free, right? And plus, your fingers could use a little bit more exercise with the health problems that this country is facing right now. It's absurd, right? Anyways, guys, so let's talk about owner financing before I start, sounding like one of those Fox CNN individuals. But let me tell you a story how I came across this idea of seller financing to even begin with. So as many of you guys know or may not know, when I first started in the world of real estate investing, I didn't have a whole lot of money to my name. I think I had about negative $187 in my bank account. I had a couple maxed out credit cards. Life wasn't good, and people I honestly just saw myself as a loser, if I'm going to be completely honest with you. And guys, I know it may be a weird thing to say on a YouTube video, but I know that a lot of people listening may honestly be nodding their heads right now and be like, man, I've been there, brother. I hear exactly what you're saying. So I had this dream of, wanting to start a real estate investing company, but I had no money. I had terrible credit. And I just didn't see a way, to get around that until somebody came up to me and talked about, hey, I bought this property, owner financing. I was like, what is that? And for me, owner financing became the great equalizer. It meant I could go after a deal that somebody with $100,000, $1 million, even $10 million cash could go after. I can compete at the same level. So what is owner financing? And let me share with you the best context for you guys to use it. So owner financing is a very, very simple acquisition strategy. It's actually a lot easier than what a lot of gurus and a lot of online different forums are making it, because as human beings, that's what we tend to do. We complicate things. So owner financing is when you go to a seller instead of a bank and you have the seller carry the note that the property is purchased upon. So let's break this down even more. So traditionally speaking, if you were to buy, let's say, a 10-unit apartment complex, because in my opinion, it works best if you're looking to buy and hold a property for the use of its cash flow. So let's say you're going after a 10-unit apartment complex. Okay, do you visualize it? Awesome, right? It's got like beautiful windows and it's got, separate units and things like that. It's great, right? It's in a Class B neighborhood. It's the most ideal investment for you. So you get this 10-unit apartment complex. Ideally speaking, if they were asking, let's say, $1 million, they ask $1 million for this 10-unit apartment complex. Traditionally speaking, you would go to a bank, you would talk to a commercial lender, you would be taking what's called the underwriting process, meaning that they would look at, you would pull your credit report, they would ask for your income tax return, they would ask for your business tax return, they would ask for a lot of different things because they want to mitigate their risk. If the bank is going to give you a loan, they want to see you as a safe risk because banks like to make money, yes, but at the same time, they want to make sure they receive that money according to how good your financials are. And they're also going to ask for the property's profit and loss statement. They want to see if the property is going to perform as well as it should. And they're going to come up with a number called a DSCR. That's a debt service coverage ratio. And they want to see how well the net income of this 10-unit building is going to be able to cover this debt, right? This monthly mortgage payment that you're going to make to the bank. All of this to say, listen, if you go to a bank for this 10-unit apartment complex, you're going to have a lot of hoops to jump through. Not only are you going to have your personal underwriting, the building underwriting, but chances are you're going to have to go through an appraisal in which you're going to have to pay for, which, by the way, guys, the last appraisal that I had was a 36-unit apartment complex that I did buy through a bank financing, and the appraisal was like $15,000. That's what it costed me for me to get the appraisal report. So you're gonna have to go through that. And then you also may also have to go through a specific loan underwriting time period, meaning that you're not gonna get the loan officially, you're not gonna be able to close for an additional 2, 3, I've seen as long as 4, 5, even 6 months in which the bank is going to underwrite you. They're gonna look through all these papers, they're going to get the appraisal done, and also a lot of banks, they do their own inspection. So a lot of banks have their own inspector on staff. They have the inspector go out to the property, which scheduling that thing in itself can oftentimes be a nightmare, depending on the bank. So guys, there's a lot of hoops, there's a lot of things that you're gonna have to do if you wanna go through the whole bank financing route. Well, the owner financing route is pretty much when you have your seller be the bank. Now, this can be advantageous for the seller in many different ways. They could, potentially defer a good chunk of their taxes. They have the ability to close quicker because I've closed as fast as 3 days, guys, upon meeting the seller and seeing the property for the first time. I think there's an 8-unit building I bought no money down, which is why I was able to close so quick. Saw the property for the first time on Tuesday, close it on Friday, right? So that's the beautiful thing, and you're able to close. And for the seller, they have a continuation of income coming in. They have money coming in every single month, without having to worry because their money is coming through a note they gave you. So seller financing overall is when you have the seller be your bank. So you're able to negotiate the terms. So just as, and then here's another benefit, guys. If you go to a bank, they're gonna set the terms for you, right? They're gonna give you the terms according to how strong your financials are, how good of an investor, what your track record, how good the property is. If you're talking to a seller, you're able to negotiate those terms. So for that 10-unit apartment complex, instead of going to the bank, let's say that you go ahead and talk to the seller. You and the seller talk, you see that the seller has a lot of needs and concerns that can be addressed and be solved by acquiring the building through seller financing. And so the seller is going to say, okay, well, let's go ahead and negotiate the terms. Now, for me, I always tell the seller, listen, is it more advantageous for me to do seller financing or is it more advantageous for me to go to the bank? That's completely up to what you and I discuss. I'm going to get 4.5% at the bank. What can we do with you and I? Right? What can we do between the two of us? Same thing with the down payment, same thing with the loan years. So typically, guys, my cookie cutter, I guess, terms that I kind of say in terms of what's going to work is 4% interest, 25-year amortization, and also about 10% down. That's typically what I'll do for seller financing. And most of the time, 90% of the time, seller says yes to that. They're like, okay, that sounds pretty fair. So I'm having the seller be my bank. I'm giving payments to the seller instead of my bank, and there's no bank involved. And because there's no bank involved, there's no credit checks. The seller's not going to say, hey, I want to see your credit report. They're just not going to do that. Same thing with a very strenuous and strict underwriting process. A seller is not going to drag me through the mud like a bank is going to. So guys, in a nutshell, that's the basic definition of seller financing. I know I talked a little bit differently about the benefits to the seller, some terms I like to use, but I want to just give you guys a little taste, a little hint of everything else you're going to find in our YouTube channel regarding owner financing. We do have a lot of resources and content that revolve around this topic. There's a video which, my brother and I do a little role play in terms of negotiating, but also guys, I want to give you a free gift because you stuck around to the end of this video. I want to give you a free gift, and it's the free owner financing cheat guide. The link is in the description below for that, and it actually includes, the cheat guide includes a free and complimentary 3-hour course that I put together with myself and very good friend, attorney of mine, Mr. Steve Hamilton, and we're talking about all the ins and outs of owner financing. And if you're an individual, guys, that like me, 5-6 years ago, you don't have the money to buy properties, you don't have the credit to be able to go to a bank and get a good loan, well, I'd like to encourage you to look into this strategy and see if this is for you. See if this is something that could benefit you and help you in terms of growing your real estate investing portfolio. Because guys, I bought a lot of apartment buildings and even single family houses and duplexes and fourplexes via seller financing. And it gave me the beautiful, beautiful ability to get the most bang for my buck. So again, guys, hopefully this video helped you out. Don't forget to click on the links in the description below. And also, guys, give this video a thumbs up. It really helps us with the algorithm in terms of being able to share this video and allowing a lot of other eyeballs to see this information. I mean, who knows? right? You might share this video and you might have a kid who's 20 years old with negative $187 in his bank account, and this kind of starts his career in the world of real estate investing. So I hope you enjoyed this video. I hope to see you guys in the next one.